Tim Moffat here from Oakleigh Investment Management. I am going to talk today about the multi-asset growth portfolio. Now it's the end of the financial year, or past the end of the financial year. There's an articles flying around in the Financial Review and Chart West just regarding to the average performance and the best performers from the industry super funds. So I thought that we would compare how the multi-asset growth portfolio has done against that in the last 12 months to the end of 2024, financial year 2024, and then obviously over a bit of a longer period, which is relevant. So the average return for industry super funds in financial year 2024 was plus 9.1%. The best performer last year was Mine Super, and they returned plus 10.7% for the year. And the multi-asset growth portfolio after fees returned 12.2%. So we've certainly had a very, very good year, and we're very happy about that. And obviously, hopefully our investors are very happy about that too. But, you know, over 3% above the average is where we want to be. Now, what that does, that puts the multi-asset growth portfolio ahead of some of those real big players like Colonial, First Choice, Qantas Super, Australian Retirement Fund, MLC, etc. So very, very happy, and a pat on the back to the team. Over the medium term, or over 3 years, the multi-asset portfolio has returned 2% per annum more than the average industry super fund. So, you know, it wasn't just last year we came out of nowhere and just had a very, very good year. I mean, it's been pretty consistently outperforming the industry super fund. I guess the question really begs, how did we achieve this ongoing success? There's a couple of things. So the portfolio really focuses on quality. We have a mix of direct Australian shares and some international shares and bonds and property via ETFs. But all of our holdings really, really focus on quality. So we're not really chasing high growth, but we're really just chasing those good quality businesses. Obviously, we want to own them at the right price, but we're really not working our way down the risk spectrum or, you know, delving into smaller companies and the like. The other thing is we do have a focus on Australia. Our investors you know, they're in Australia, they're Australians. So we do have a bent towards Australia. A lot of the industry super funds and the big asset managers now are pushing towards greater weights to international. We think it's actually more sensible to still have international exposure, but given the capital that you're investing is likely going to be spent in Australia, as an Australian, we think it's important that you continue to have a focus on Australia, investing in Australian assets. One of the other things that we did very, very well was we avoided fixed interest or bonds in 2022. Globally, a lot of the effectively bond funds lost between 10 and 15%. We had very, very minimal exposure to fixed rate bonds, and so we didn't suffer the losses that a lot of the other industry funds had. We also don't have, and currently don't have, and didn't have much commercial and office exposure in the real estate space. So that's also helped our performance, which a lot of the big funds like unlisted property, in particular in the office space, and that's been a pretty horrible from an investment return over the last couple of years. The other thing we've done well is we've pivoted the portfolio away from the share market and towards the share market at the right time. So 21, 22, we were holding basically max defensive exposure, high cash levels. If you look back on the chart, you'll see that those periods were quite difficult, especially into the middle of 2022. But then towards the end of 22 and certainly with it into 2023, 2024, that portfolio has been fully exposed to our max weightings, which is about 80% growth assets, which has been quite favourable despite all the fears and concerns. It's been the right strategy. The markets have been climbing the wall of worry with intermittent corrections. And look, I think for the time being, that looks like that's how we're going to continue to position the portfolio for some growth over the next 12 and 18 months at least. So if you're an investor and you'd like some more information about adding to your portfolio, or you're not an investor but you'd like some more information and inquire, just reach out, invest@oakleigh.com, and someone will get in contact with you. Thank you.